Okay, so let's have a look at step number 3 then for Fuller. So type B for incomplete records. So step number 3 is where we prepare a balance sheet. And the reason why we do the balance sheet first is that we want to calculate what is our net profit. And then we're going to bring this net profit over to our profit and loss account for step 4 and work backwards then to fill in any other piece of information that's missing. So with our balance sheet then, we're going to have your heading. So balance sheet for Fuller. So that should read Fuller 2009. Sorry, 2008. So we know with our tangible assets, we've got premises, equipment and delivery van. So our premises that we have, we bought a new premises, so it was 442,000 working 2. So our net book value. Equipment then, part of working 9. We bought extra equipment, so we 35,000, and our depreciation then was 2,750. Then we had delivery vans then as part of our workings as well. So we go back to our working 10. So remember, we bought delivery vans for 30,000. The depreciation that was 1,500. So we go back to your workings, you'll be able to see them. So that's your working for equipment, 30,000. 35,000 and 2,750, and delivery vans 30,000 and 1,500. We always add them up, so add up your cost, your depreciation, your net book value. So remember, cost take away depreciation gives your net book value. Then we've got intangible fixed assets, so we've got a goodwill that we calculated in our first working. So our very first working, statement of step 1, calculating the statement of capital. 6,250, and then we also have our financial assets or financial investments of 50,000, and we add all them up, and that's going to give us our kind of our net assets. So we got 559,000. Then we're going to have to do a calculation on our current assets, take away our creditors due within 1 year. Now, the majority of stuff that we get for current assets and creditors due within 1 year is coming from the end of the business, end of the question. So we go through the question and look at the end of it, we'll see this the information that we're including. So we got closing stock, 205,000. So remember, of that closing stock, heating oil of 300, remember, we're going to be using that for our trading account, so 220,500. Our debtors then, going to be 34,000, and remember we have lesser provision. We don't have any investment income due, and then we've got rates then from our working 12 that was prepaid of 1,750. So we add them all up together, and we got our current assets of 55,230. Then we look at our creditors due within 1 year. So we've got our trade creditors 35,400, bank overdraft 5,400. So those two are going to go in. Then we have our loan repayment of 12,000. We got our interest due from working 4. So remember, we did pay some interest. So we had 3,000 is our yearly amount. 2,000 is what we paid, so we left to pay then is 1,000. Then we got electricity due then. That's coming straight from this adjustment here at the end, or piece of information from the end of the question. So we add all them up, and we got our creditors due within 1 year. Then we take them away from our assets. We got our net assets, and then we add them on then to the figure that we have in that column of 559,000. So we know that the figure we get from here must be the same as the figure down here. But remember, we're doing this balance sheet so we can calculate the net profit. So we don't know the net profit, but we'll be able to find it out by filling in the blanks. So finance by section, we've got 108, so 108,000. So remember, our total loan was 120. We've paid back 12,000 of it, so the amount that's left to be paid is 108. Capital and reserve then, so our capital we had at the start, 40,000, that's how much we paid for the business. We introduced 3,600. Now usually we'd add the net profit onto that, but we don't know how much it is. And then we've got our drawings. So what you're going to do in your calculator, you're going to put 108,000 plus 40,000 plus 36,000, you're going to take away this 19,422. So that's the figure we get. Now we know that this figure and this figure should be the same. So if we take the 524,576 away from the 559,970, that should give us our net profit. So I've done here, so our net profit is 35,392. And when we put that in, it calculates, so the two of them are the same. So how do we do that again? So we put all the figures we had, so 108,000 plus 400,000 plus 36,000 minus the 19,422, because that's our drawings. That gives us a figure. And that figure we took away from this figure up here, because these two figures should be the same. So the difference is our net profit of 35,392. And that's the figure that we're going to bring across to the profit and loss account. And we're going to start at the bottom of the profit and loss account, and we're going to work our way up.